Hello, welcome. Whoa, music, wait. Today, I'm gonna show you one of my models. I decided to start a series on my playbook that includes all the setups, all the models that I used to trade. And I made a list of A++++, A, B+++, B, C. This is a model I use every day when I can. And it's the 5:30 or 2 to 6 a.m. close model. You've seen me mention a little bit a few times about the 5:30 macro or the 5:30 injection volatility and when time is right to take some really high probability trades. And today I'm going to tell you about my 5:30 model for Nasdaq futures. Okay, let's see what I have. Oh, first, wait. I see everybody does it, so I don't want to get sued. So anything you see on my channel is not financial advice. You trade at your own risk. Anytime you put money in a trade or in financial instruments, there's risk of losing everything. I'm not responsible for your actions, and I'm not a financial advisor. Do whatever you want, just don't involve me. I'm just doing something for informational purposes only. Okay, this is what yes, with that out of the way, I have to do it. Everybody does it, I'm such a huge streamer. I could influence and sway your trading, so you have to be careful. Don't learn from me. This is just information. Just information. Make your own investment decisions and trading decisions. Okay. What is the 5:30 model? Let me put this bigger. What is the 5:30 model? Why is this amazing? Okay. Many times I frame my trades with the development of the 4-hour candle. For example, the London 4-hour candle, it's not the whole of the London session, but the London candle, and we are talking about New York times, goes from 2 a.m. to 6 a.m. It's a 4-hour candle in the futures markets. That's what I trade. In my time is 9 to 12, right? Sorry, 8 a.m. 8 a.m. to 12 is the 4-hour candle that you see in the chart if you open the 4-hour chart. And as you know, the development of any candle, because everything is fractal, there's an open, an expansion phase, and a close, an accumulation, manipulation, distribution. A candle starts it opens up, and if I can drag it, at one point the candle, imagine that the candle is bearish, it opens, creates the wick, then expands to the downside, and then at one certain point it reaches the minimum that it can accomplish, and then it works back to a close, right? So the candle moves. When I do it like this, development goes like this, and then it closes, right? Okay. So the model I'm using at 5:30, it's a time-based model. That means we're looking for situations, which is not always, but often, around 5:30, and it can be 5:20, it can be 5:15, it can be 5:22, it can be 5:33. The time changes, but let's say ballpark is around 5:30. An injection of volatility kicks in because algorithms that are trading wider and bigger sizes will prepare and position themselves for the close of the 4-hour candle. So we are playing this game where we are trying to get what's the low of this 4-hour candle and where could we retrace to. And as you can see, it can happen in many shapes, but if the narrative you built is correct, you will get a nice injection of volatility for the close of the 4-hour candle. That's the model. Now, how do you apply it? Okay, let me scroll. I should have something, an example. Okay. So this is yesterday during the London session. Okay, we had there was a gap formed at the opening yesterday. We went up, could not continue to the upside. did some accumulation at around, what was it that I could draw like this? What was it? The button? This one, okay. So 3 a.m. So the candle, the 4-hour candle opens at 2 a.m. At 2 a.m. yesterday, we had a move up into a certain region responsible for breaking this important liquidity level. We came up, manipulated, or some would say we created the wick of the 4-hour candle, and then we moved down. I did capture this trade yesterday, but we're not talking about that now. So there's some statistical levels, historical levels that you can check to know if and where the manipulation will go to. I have an indicator for that. It's called quantile levels. It's going to be released soon once we hit 1,000 subscribers. Please like and subscribe. And the whole session, so I captured a part of this move, I didn't hold, and then it seemed like it was going down forever. Now, there was this very important liquidity level here. Let me see if it was the previous day low, I think. Where's my key levels? There you go. Yeah, it was the previous day low. I mean, I don't make it too confusing. I want to remove some of these annotations. We don't need the net change levels. Okay, so price during the London session between 2 and 4, we hit an important liquidity objective with the previous day low. And what time is it? 5 a.m. Okay, so here's where this specific model is a time-based model, and between 5:20 you activate yourself. Well, you've been watching price, probably trying to catch some other statistical model or some other setup, high probability setup that you have in your playbook. In my playbook, when it's 5, I start to analyze the situation and see if we can catch the retracement of the 4-hour candle. So what did I see at the time? I did take this trade. I show you the logic to build and frame a trade that maybe you can take around 5:30 and hold it till 6. That's generally how it works out. Okay, what did we have here? So this is the framing of this specific trade, and I don't want to teach you everything I know about trading and all the tools I use. I will, but this is specifically about once you have a bias and you have framed a certain direction and where the retracement of the 4-hour candle will be, then you can enter freely and know that there's going to be an injection volatility around 5:30. In my case, I had measured the last manipulation leg before the London session dump. This usually you can draw some projections, and price will either revert at around 2 to 2.5 or between 3 and 4. So the first confluence is the projection of the last leg of the manipulation. We were already hitting 3 to 4. Then for market structure, we have this unmitigated zone, which I marked in gray. It's a 5-minute zone. This is a 5-minute chart, and this is 50%. So we hit 50% of this unmitigated zone above all this range. So it's an area of interest where if price is intending to go up, we could have a reaction. There's a few other things. This is the exhaustion area of where the 4-hour candle can expand to, and that's the end of the expansion. Then there's going to be a small retracement for the 4-hour candle. And then there's an extra confluence. So you can install the standard deviation from FADI. For example, that will show you statistically 4-hour candle also, where did it expand to? What's the one standard deviation of an expansion? That means that most of the times, 2 out of 3, 70% of the time, 68% of the times, the 4-hour candle will not go past this level. Right? That's how you read it. But read it up. There's a very cool website called NQ Stats, where you can get a lot of information about the, let's say, statistical models related to Nasdaq. Okay, so with this, these were the confluences. We took previous day low. We are at the 3 to 4 projection of the last leg of the manipulation. We are in an unmitigated 5-minute zone. We reach more or less the exhaustion level of the expansion. What time is it? It's 5. So what do? You go down a time frame and you start looking for a setup. And that's what I did. So let's see what would happen. And I caught this perfectly as it was happening. So I was telling my friends, look, it's 5:30. So I was not planning to click any buttons until at least 5:20. So we get to 5:20. Okay, so what do we see? Market structure, very simple analysis. We are in a zone. It could be the reversal. It could be the retracement of the 4-hour candle. So we wait for some pattern to form. I use market structure and DTFX style of analysis, or AFOP style of market structure analysis, and that's what I did. So this was supposedly a break of structure to the downside, but we already had a market structure shift here, and I consider that a sign, an early sign, that price was hitting a moment where it wanted to reverse. And so I did anticipate this reversal. So the last thing you see is this was there was a battle of the areas responsible. So this fractal was a sort of a golden fractal, like my friend Ro calls it, because it was responsible to push through a lot of liquidity levels. So we could not, this fractal failed to push price down. We come back to retest it, and then we reaccumulate before breaking down. This now creates a responsible area that we violate to the upside. So we created a responsible area and then we violated the upside. This is also in other schools of trading becomes a breaker. There is an upswing that takes liquidity, and then when we close above it, that holds price. What time is it? It's 5:20. Okay, we know it's the start of a retracement, could be the start of retracement of the 4-hour candle. We are in we have all these confluences. So what do? We enter. So I enter the trade, and I did take, in this specific case, I did hold until here, and runners stopped me up, like I left a runner, or I trailed to here, and then this got me. Unfortunately, this was the low of the day. This made me very, very upset, to be honest. So I took this nice win. I read correctly that the close of the candle of the, I hope this, let me close the windows 1 second. Sorry about the noise. I hope it doesn't come through too heavily. So we just finished this example. Before the 6 a.m., indeed, we hit this target. I chose that as a target because there was a sloping and sort of a trend line. Trend lines becomes target when the right time is right. In this case, the time was the close of the 4-hour candle. That was example 1. Let me go back. Okay, that was example 1. Let's go to example 2. Okay, so I need to remove this. Scroll. What was it? Okay. Let me show you. Did I hide all the other annotations? Okay, this is a different narrative. So I just want to show you that there's different narratives you can build from if you know that it's possible that a move is going to happen at 5:30. You need to frame it properly and have a very high probability that it's going to work out. So let me see. What did I have here? I already have everything that I wanted here. Let me remove this alert. Maybe I didn't have the key levels. Let me go roll it a little bit back. Let me add the big candle. It's not showing. That's good. It's showing. Okay, yeah. So I want to go before so that it shows the other one. Give me a second. before the close. Okay. So we are in a similar situation. Do I have the 5 minute here that I can show? Didn't make any sense. So the narrative for this second example is slightly different. I had a lot of context on this that I can't see. Yeah, maybe. No. Okay, well, let's wing it like this. This is exactly another situation where, look, and people don't like it when I say it, but sometimes you can take a trade blind without any pattern showing on the chart. In this, so what I do is exactly this, which is it's not, oh look, the pattern happened, so then I build a narrative from the pattern and then execute. In this specific model, it's a time-based model. I pick a time and then look for the pattern if it happens. So this is exactly that. In this case, we had a huge move up. This just happened, right? I missed the move up because at 3 a.m. I saw some equal lows, and so I saw this. I was very upset because it was catchable. This run was catchable, but I got psyched by the fact that there was a wick. And if you looked at it in NQ, basically I missed. Oh my god! I missed this long. I was very upset, and I stayed patient. I didn't try anything. I didn't take any trade. I was very happy about it. Then I saw that price was starting to dilly-dally, you know, not a clear direction. It's an indication that the upwards thrust has lost a little bit of momentum. When is the time where a clear retracement is going to happen? Many times it's at 5:30, 11:30 my time. So I was looking. Okay, oh, double top, couldn't break it. We do one extra pass. Break a structure. We retest it. I can do it. Can we break this? We can't. What time is it? It's 5. It's 5:20. It's 5:27. Okay, when it's 5:15, 5:20, and now you look at how the 4-hour candle looks. I'll show you how it looks. Okay, let's do it. We go a little bit back. So the 4-hour candle, see, it has already had a certain retracement, but it has expanded a lot. And the closest level that you can see, which was some in my mind, was Asia high, is around this week, right? So here, so if there's a small retracement, and maybe if we're going to bullish the whole rest of the day, but the close of the 4-hour might just retest Asia high. It's not that big of an assumption. It's just the candle, like I was showing you somewhere. Yeah, we lost it. So the candle I was showing you, it will close. In this case, oh my god, I'm messed. We'll retrace. In this case, it's a bullish candle. We'll retrace a little bit at the close at 5:30. Confusion. So with the time in mind, we're waiting for between 5:20 to 5:40 for something that makes sense, okay? And look, so the hints about this were, oh my god, it is true. There's a accumulation here to maybe continue. There's a retest here, and it cannot continue. It comes down, it cannot come down. It comes back up, but now the time is up. We're almost 5:30. The close of the 4-hour candle is happening. So there's a lot of liquidity that's been built below here. The 4-hour candle needs to retrace. This is an SNDR that's been stressed out of their mind, right? So if we go back here, we take it. So, okay, that's the context. So finally, we come up to, there had been already a passage into this origin, and we couldn't continue. We come back to test it. Now this origin is holding price. I see a double top. There is divergence with ES. There's actually multiple divergences. Some did not get drawn up. This is also very important. We call it SMT, call it however you want to call it. A divergence with ES, the other index. The elephant in the room took this high. If the elephant in the room took this high and NQ couldn't, NQ is much more agile than ES. If NQ cannot take it, it means it's very, very weak. It means if there's a retracement, the retracement is going to be pronounced. And so that's what I did. I saw, hey, ES took this high and we have a double top. We are inside an origin, internal origin, but what time is it? 5:26. Okay, when we break this level, this makes it a breaker. I call it imaginary for an inside joke with a friend. I will tell you one day. And I enter. I enter by banking on the retracement of the 4-hour candle. Now it made me sweat a bit because I didn't take any profit, and price arrived one tick away from TP, and I just let it run. So it missed me once or twice. See, it missed me by literally one tick, and then one tick 2 times, and then finally at 6 the move happened. There you go, and we go a bit more down. What I want to do is this. So it was Asia high. See, I told you the objective was probably to retest Asia high, and we came back and retested Asia high, and that was it. Then the price wanted to go on, so we did go up like crazy after that, but I was already out. So I left a runner. You never can predict if this is the high of the day, so I left a runner, and that runner got stopped. But as you can see, you can frame. This is in brief my time-based 5:30 a.m. model. 11:30 for Europe, 10:30 for UK. You look at the objectives that the 4-hour candle can retrace to at 5:30 with the market structure, narrative, standard deviations, projections. Use everything you can to frame a trade. And generally, there is an injection of volatility. You can catch an easy trade. That's my 5:30 model. I hope you enjoyed this. If you have any questions, let me know. Follow me on X, Key Poems. Follow me on, like and subscribe on YouTube. If we get to 1,000, and we're very close, we're gonna release the pro indicators. I have a Easter egg. Anyway, thank you for watching. If you caught the Easter egg, comment on it. Then I know you got to the end of the video. Nobody ever gets to the end of the videos. So if you've been here, I appreciate you. Thank you, and audio. Ciao.